What's up, everyone? It's Sean from Predicting Alpha, and today I'm going to be going over a stock that I found this morning while I was scanning for buying opportunities in the options market called IMMU. So Immunomedics is a really popular stock amongst the retail trading community. It's been all over StockTwits for a very long time. If we go here, we can see, there's almost 10,000 watchers. And if we look here, you can actually see the retail sentiment is extremely bullish around this. So you tend to get a lot of action because a lot of retail traders aren't in a position where they can be selling options. So when there's a good buying opportunity, they tend to flood in. And for the last little bit, if we look at it, IMMU has actually been trending up for the last month. And that's definitely attracted a lot more eyes to be looking at it. Only recently has the message volume started to decrease again. So I was scanning for opportunities to buy stocks during this morning's live, and IMMU was one of the ones that came up at the top of my list. Now, why did this come to the top of my list? Because when I look at it, what I'm always looking for when I trade options is what does the market think is going to happen versus what am I able to forecast is going to happen in the future. And what I see here is that the market thinks that this is going to move at about 62% implied volatility, whereas my forecast for volatility, given all of the models that I use on the back end of my terminal, says that there's going to be actually a lot more volatility than what the market thinks. This stock is going to move a lot more than what is priced into the options. What does this tell me? It tells me that options relatively are cheap around this stock. So what's the trade here? What do we actually want to do? Well, what we'd want to be doing is buying options around IMMU, because the premium that we pay for the options is going to be cheap compared to how much money we're going to make from the stock moving more than what the market thinks. So bring it back to IMMU, if we actually look at the implied versus realized volatility, we can see that in the last little bit, there's been a huge gap between implied and realized. The stock has been moving more than what the market thinks it's going to. So now we know actually what play we want to be taking here, that we want to be buying options. And the last question is, what trade should we actually structure? So to figure this out, I'm going to look at the skew graph down here. And what I can see here is that for the short-term options, the 10-day options, there's actually a lot of demand at the money. But if I think there's going to be a big move in the next couple days, out of the money options are pretty cheap. So I could pick these up, and if there happens to be a big move, I could make a lot of money. Now, if I wanted to give it a little more time to come to maturity, the longer dated options are actually very cheap at the money. So what I would do is one of two things. If I wanted to bet on a big move happening in a very short period of time, like very soon, I would go to the near dated options and buy a strangle. And if I think that over the next month or so, there's going to be more volatility than the market thinks, I would actually just go right at the money, buy a straddle, and hold it. And then once I realize a gain of probably about 30%, or when this edge starts to close up, so when the implied and realized volatility start to narrow and become closer, then I would close out the position. So if you're looking at trading IMMU, I hope that this analysis has helped you make a more informed decision. Leave a comment below. Let me know what you're actually looking to do with this stock, and I'll be happy to go over it with you. Hopefully we make a lot of money here, guys. Thanks a lot.